President and CEO at Gerber Kawasaki Wealth and Investment Management, rejoins me here. Ross, thanks for being here.
Oh, my pleasure. My pleasure.
All right, Ross, what did you learn this year? I'm setting
well,
you up.
I learned that some things change and some things stay the same.
Okay.
You know, and that's one of the reasons. You might have a lot of opinions about companies. I'm an activist investor, and a lot of people perceive that I had sold all my Tesla or this or that, which is not true. I sold about half or 40% of my Tesla position, but it was mostly as a rebalance and a valuation thing. And what's happened in the last 2 months with Elon's amazing support of Trump and then helping Trump win, and now Elon's president of the United States, it really has put Tesla in this new light that it's almost like a meme stock now. We've moved to all-time highs. The valuation makes no sense, but that's okay. And we've made us back. Now Tesla's back to our number 2 stock position behind NVIDIA at my firm. And, again, we're trimming. We're going to continue to take profits here because as much as I love the potential of Tesla, I think there's a lot of risks in the stock.
Okay. I think that's a very fair description. The valuation obviously makes it high beta, though I thought maybe you were going to say, I learned not to invest on politics, because last time we talked, and a lot of that throughout the year, it seemed like you thought the alignment with Trump was going to be an ultimately negative thing.
Well, yeah, and I think it's still yet to be determined. Just because the first 2 months have gone smooth, now we've got them shooting down the GOP bill. Elon, I thought, did the right thing, as Doge should be shooting down these pork bills. But Trump comes in kind of looking weak, and now we're all calling him President Musk. So I don't think this love affair, on the short term is something we can extrapolate out to the long term yet. That said, if it does work out, certainly that's good for America, but I don't know how it's so great for Tesla because they still have to solve autonomy. So even though the laws and the rules might change to make it easier for Tesla, it doesn't change the fact they have to solve autonomy first. And so Tesla has a ton of expectations. But when you're talking about politics, I've never really invested on politics. I thought it was a mistake to take one side or the other. So this could have been a disaster for Tesla too. So coin flipping your company is not necessarily the best thing. The fact that it's worked out with Musk actually doesn't surprise me because he tends to be this kind of crazy guy who pulls stuff out of the skin of his teeth, But that said, that's why we still own the stock, and we've made a lot of money since then, and I can't complain about it, and I'm not going to. I'm very happy to be up, another 50, 60 million on Tesla, and we're going to take some profits here.
What about the theory you told me that they're going to lose ground sales-wise because people would choose their vehicles and purchases kind of aligned with their politics? Do you think that's still a legitimate talking point, or did the numbers show that, hey, this is actually the cool party this time?
Well, we're seeing the numbers in Europe are down substantially from last year, month over month, and year over year down about 15% in Europe. We know the numbers are down here in California, which is Tesla's largest market in the United States. We don't know if Texas and Florida all of a sudden had a surge of Tesla buyers. I mean, maybe they did, and we'll see that in the numbers. We know that there's still a lot of incentives to buy a Tesla. There's never been a better time to buy a Tesla. So, by the way, if you don't own an EV, Tesla makes the best vehicles. It is an incredible deal right now. And the big boogeyman here is, will they take the $7,500 tax credit away? And if Elon's involved with that, it's like punching yourself in the face, So there's a lot of uncertainty with Tesla. So the politics in Tesla actually adds the risk into a stock that didn't need that risk. So right now we've got an extra valuation bump, but we haven't actually seen that bump lead to better results. And that's what we're going to have to see. 2025 is going to be the show me the money year for Tesla, for sure.
Yeah. Look, I know a lot of people are going to want me to dunk on you, but it's hard for me to argue with the logic that you just presented there, frankly. I mean, when you say it's taken on risk, I think the valuation does confirm that, basically, that it is just shifted higher into the beta category as like what drives it. So, a 200 times PE, the most expensive ever, that's double what it was back when you were really pounding the table on it, before it was even profitable, before it was in the S&P 500. So to me, to live up to double those expectations, I mean, those have got to be sky-high expectations.
Well, you hit it on the nose. Remember at the all-time high a few years back, we expected $4 of earnings, and it was trading at 100 times earnings. And I was like, wow, that's peak multiple. And I can go out and buy NVIDIA today at 35 or 40 times forward, or Broadcom, a lot of the customers, of NVIDIA is Tesla and Elon's companies, So there's many opportunities for much better values in the world than Tesla. But I think we have to understand one thing that happens in the stock market during bull markets like we have today is some things make no sense. And that's just okay. It's like, if you want me to explain this to you in some logical manner, there is none. So the valuation makes no sense. People are betting on this company for various reasons. And if they solve the solutions, the things they're trying to do, that it'll be amazing. But I think this is not an easy thing, and it might take a long time. But as a shareholder, I'm not sad making money, but you can dunk on me. I get it. I sold some stock at various prices. I sold stock at 400 3 years ago. I sold stock at 200 recently. I've sold stock just recently now at 470 something. I've been selling stock forever because we made 100x on our money in Tesla. So you show me somebody else who's made 100 times their money on a stock. Okay, and we did with NVIDIA too, by the way. So it's like, I'm crying all the way to the bank. I mean, right now I'm sitting on the beach in Hawaii. I'm crying over my Tesla.
Ross, if we think about then how it possibly could justify the valuation, it seems like there's two sides to that argument, which is the future stuff that hasn't fallen into place yet, but in theory could. The robos, maybe the semi-trucks or whatever else, maybe the robots, maybe the Android. And then there's stuff that they make money on right now, which is the cars they sell and the energy that they sell as well, with infrastructure and with their actual battery power. Do those latter two parts, because I know we can kind of all debate, and everybody is kind of debating the future part. What about the parts in which they make money right now? Like, how long would it take them? How many cars would they have to sell? How much energy would they have to sell to justify this? How many years? Like, how long would that take?
It's funny because the house I'm in has a Tesla Powerwall and solar panels here. It's completely off the grid house, and with electric vehicles, it's such a great solution. I was talking about it last night at a place called Common Ground, which is a sustainable farm here on Kauai, and the whole idea is, how do we make the world sustainable? So that market is the market I love for Tesla, and I think it's unlimited. So if you look at earnings estimates for 25 of, let's say, 320 to 330 a share, and you just want to assign an NVIDIA multiple, which is what I do for stocks like Tesla, let's say 50 times forward earnings, that's like $200. And that's what I value the main, Tesla business. And then all the other stock appreciation is what I call the hope valuation of, like, what happens if these things happen. And so people are assigning a very high valuation to this hope because Elon got elected president, and I get that. But that's the part that's completely subjective, whether I'm going to give you $100 a share for robots or I'm going to give you $300 a share for robots. It's going to trade all over the place for some time. But in my mind, the true value of the company is much closer to $200 a share if you take out all the speculation.
Okay. Ross, on the robo stuff, I do probably want to talk about that, just because it is seemingly the next thing, the 2025, upon which a lot of this hinges on, both policy-wise, what could change. I mean, you mentioned the EV tax credits policy-wise too, and I'm also kind of in your camp there, where, like, I could get maybe it hurts the peers and competitors more, but you just never want to do something that mathematically hurts yourself either. So putting that aside.
For sure.
Right. It seems like the robo stuff is the big question. I took the Waymo and SF and was super impressed. Waymo's locked into Miami now as well. Even though I've heard the Tesla FSD is getting really, really good, I mean, it still is not where Waymo's at functionally, I don't think. What am I missing on that subject? Why is Tesla not like number 2, if not number 3 right now?
Well, you're bringing up the point exactly. I've been taking Waymo now. I dumped all my Uber stock after I started taking Waymo. I won't take Uber again because Waymo's serving all of LA now. And it's great. It's literally a great experience. It drives really, really well. And I took it in downtown LA in extremely difficult conditions, put my children in it, and I had complete confidence. And now parents are even letting their kids take Waymo to school and to baseball practice because they're more comfortable doing that than letting an Uber driver do it, or a nanny even. So Waymo is clearly doing a great job, leading now the way with Robo Taxi, making money on rides. And in my Cybertruck, if I drive full self-driving right now, I'm not going to get down the street without an intervention. So I don't care about all these videos, okay? These videos are BS. And I do this every day. I mean, it's like, I'm sorry. It's pretty good. I'm not going to say it's bad. It's pretty good. But is it level 5? Not even close. Not even borderline that I would get in the back of my Tesla and try to get it to drive me anywhere. I would hit somebody for sure. So let's be real here, and that's what I'm talking about, the focus that Elon needs to have his team, because obviously he's not going to be doing it, really focused on solving full self-driving, because if they don't solve this, robots and everything else doesn't matter, you know? And so right now, we haven't solved it. So I've kind of created this thing in my mind. It's either solved or it's not solved. And until it's solved, you know, we're stuck here and we're losing ground every day to our competitors.
As I mentioned, I know you still own Tesla shares on behalf of clients or for yourself. But for those that are in your ETF, GK, there's not any Tesla in at least the top 10 right now. It seems like it's a big NVIDIA chunk. It's Apple. It's a good bit of semis. So it seems like it's more sort of an AI-focused trade in some ways. But you got Netflix in there, too. You've got the Mag 7 stuff.
Right. Well, yeah, we own Tesla in my ETF, and we own Tesla closer to a weighting of the S&P because we do think the valuation's incredibly high. But, you know, what I see the future, and I really believe in this AI future, it's really an arms race between the major players, and it's a hardware battle first that will turn into a software battle. And so, you know, you obviously have to have Tesla in your portfolio here, but when you're talking about where is all the money going? It's going into infrastructure for AI, and that's where we want to be as investors. The second side of our portfolio, we're very much with the consumer here, and that's why we like what's happening in the economy, is that the consumer is going to feel much better moving forward with Trump as president than we did with potential of Harris. So we're seeing spending increase. We're seeing the economy increase. We saw the Fed act accordingly, and we actually think this is a smart move from the Fed because we don't want inflation to come back, and the economy is accelerating. That's great news because we're going to see it in earnings in Q1, and that's what investors just have to be patient. This is all good right now. If you're a stock investor like I am, this is all good. And my portfolio is positioned to take advantage of AI, the consumer, as well as we've been adding to healthcare themes as well now that it's gotten cheap. So there's lots of opportunity for stock owners, but valuation matters. It will always matter, no matter how frothy the market and how difficult it gets. That's why you need these pullbacks in markets to really give yourself the opportunity to buy the dip and look for the opportunities when things pull back. Because on a typical day, stocks are now very expensive by all measures, and maybe for good reason, but that's where we're at.
All right. Pretty reasonable take. Thanks, Ross.